Credit scores have become so important to the lending industry. The higher that a consumer's credit score is, the lower their interest rate may be on a mortgage loan with some lenders, automobile loans. There are many factors that go into determining a customer's credit score. The higher that your credit card limit is, the lower that your balance is, will make your credit score higher. How long you've had credit history goes into determining the credit score. How you've repaid your creditors over the time that you've had the credit. If you've had any open collections, bankruptcies, delinquent credit, those items definitely affect it and could lower the credit score. Also, many times there's errors on consumers' credit reports that need to be fixed with the credit bureaus. Our experienced loan originators can assist you with reviewing your credit to determine if there's any errors that need to be disputed with the credit bureaus to increase your credit score. One of the advantages of doing financing with North Country Savings Bank is we look at your whole story. Many consumers don't have any credit that shows up on the credit report. That doesn't necessarily mean that you don't have any credit. That means perhaps you've always paid cash for all of your debts. So we can establish what's called alternative credit in helping make our loan decision. We would ask you for a rent payment history from your landlord for the last 2 year period of time. We would also ask for letters of alternative credit or payment history from 3 other sources. Your car insurance agent, utility companies, cell phone bill, doctor bills that you pay on a timely manner, so that we can, even though you don't have a credit score, we can help determine that you do have a credit history so that we could help you with financing of an automobile or a home loan. So a consumer comes in and they don't have credit and they ask me how they can establish credit that would reflect on the credit bureaus and start establishing a credit score for them. I recommend that they get a loan. They're probably going to need a co-signer for that loan. They could take out a small amount such as $1,000, finance it over a couple of year period of time. It's very important that they make all their payments in a timely manner for the term of the loan. Do not pay the loan off soon thinking that that looks good to the lender, because it doesn't. We need to see that you've established a credit history. Another way to start establishing credit is to obtain a store card, a gas card, some kind of credit card. They're probably going to start you out with a loan limit of $200 or $300. It's very important that you don't run the card up to the maximum limit. Make a couple of purchases, make the payments, pay it off in whole. As long as there's no 30-day lates, it does not reflect negative on the credit report. Consumers come in, sometimes they're concerned because they have so much available credit on their credit cards. They have, for example, a couple of credit cards that have a $20,000 limit, which is not unheard of nowadays. They're concerned that a lender is going to look negatively at them because they have so much revolving available credit to them, and that's not the case. Their credit score is much higher. They obviously don't use a lot of credit, a lot of revolving credit, so therefore it really reflects positively to a consumer. So it's very important, don't close out the card because you have such a high limit on it. Many customers call, they're concerned that because they filed a bankruptcy in their past that they're not going to be able to purchase a home in the future. That's not necessarily true. We look to see that a bankruptcy has been discharged for at least 2 years, and we look to see that you've reestablished good credit since the time that your bankruptcy is discharged. That would be with a 20% down payment. If you're looking to put as low as a 5% down payment, we would look to see that the bankruptcy has been discharged for at least 4 years. And again, we're verifying your repayment history for the last 2 years. It's very, very important that since a bankruptcy has occurred, that you've reestablished good credit and maintained the good credit. The first thing that you should do if you're thinking about purchasing a home, either now or in the future, is to make an appointment with one of the experienced loan originators at North Country Savings Bank. When you come into the office, we are going to pull your credit report. While you're there, we're going to review your credit report with you in detail to determine if there's any issues that need to be taken care of. We're going to look at your credit history. We're going to review your credit score with you, which is going to determine the minimum amount of money that you would need for the down payment of the purchase of the home. We're also going to verify your income to determine your affordability. We're going to verify your assets to see what funds you have available for the down payment and the closing. It's very important that you make an appointment with an experienced loan originator of North Country Savings Bank before you meet with a realtor to go out and look at homes and find your dream home, only to be disappointed that you're not in a position to be able to purchase one at this time. The best way to get your credit report for free is to go to the website www.annualcreditreport.com. From there, it will link you to all 3 credit bureaus. There is not a fee. It will not give you your credit score, but you don't need your credit score at that point. But you want to review all 3 credit bureaus because not all creditors report to all 3 credit bureaus the same information. If you pull your credit reports and you can't read them, again, contact one of the experienced loan originators at North Country Savings Bank. We'll be happy to review your credit report with you and determine if there's any issues that you should take care of with the credit bureaus. If a consumer pulls their own credit report through the credit bureaus, it does not affect your credit score. What can affect your credit score if you apply for example, several credit cards in a short period of time, that could reduce your credit score. And again, it could lower your credit score enough that you may have to put more of a down payment on the purchase of a home. So be very careful with who is pulling your credit and how often you're requesting credit.